What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. Now we are back today with a crucial market update as the SEC has sued another crypto exchange for security law violations. We have Crypto.com delisting USDT at the end of January. And last but not least, we have Quant making some very big connections with big tech companies like Google, Amazon, and Microsoft. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Saturday, everyone. If you've not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto squad, and I love and appreciate you all. Now, as for today's question of the day, I want to know, do you think Bitcoin ends 2023 green or in the red? Let me know in the YouTube comments down below, and we're going to walk you through some on-chain data and prior bear market history to show you guys exactly what I am expecting for this upcoming year. But first, I do want to hop into the charts here real quick, as Bitcoin and Ethereum are still on major breakout alert at the moment. We have seen some very impressive moves from both Bitcoin and Ethereum on a year-to-date basis after a very ugly 2022, and Bitcoin is currently sitting at 19.3K. Now, I did tweet on, I believe it was Thursday, that I think there is a very strong possibility that Bitcoin does make a move back up to 20,000 here, which is a very significant level for Bitcoin, as it is in fact the 2018 all-time high. This is the first bear market in history where Bitcoin has broken below a previous bull run all-time high, and therefore I would expect this to act as a major level of resistance for Bitcoin in the coming weeks. However, as we have previously cited as well, Bitcoin does tend to make a lot of these very big bear market rallies. We can see here back in 2018 that Bitcoin actually went ahead and almost doubled here from about 6.3K all the way up to, let's say, 11.8K. That was a move of 92% to the upside. Then we saw Bitcoin rally yet again another 50% from 6.5K all the way up to 9.8K. So you guys can basically see that Bitcoin rallied here 50 and 100% respectively and still put in new lows before actually entering a new bull cycle. And the point being made here is that I actually think this Bitcoin bear market rally will have some serious legs to it. In fact, I don't expect it to stop at just 20K. I would actually expect this Bitcoin bear market rally to go all the way up to 24,000, which would be a move of 54%. And that is where I would expect Bitcoin to face some resistance at the 200-week moving average. Now, the reason being here is if you actually zoom out and take a look at the charts, if I remove the lines from this chart completely, you're going to notice that every single time here, had you bought at the 200-week moving average, this would have made for a very good buying opportunity. I mean, back here in 2019, had you bought at the 200-week moving average, you could have made about 319%. And then once again, back here in 2020, had you rolled that up all the way to the previous bull run all-time highs, this was a nice move of about 1,241%. So historically, the 200-week moving average has been a very strong level of support for Bitcoin, and this is effectively the first time in history where Bitcoin has actually broken below it, and not only broken below it, but spent a sustained period of time below the 200-week moving average. And as we have discussed multiple times on the channel when looking at charts, what once acted as a strong level of support should now act as a strong level of resistance and also a magnet for the price action. And that is why I do actually suspect Bitcoin will make a run back up to 24K. Now, in terms of what this means for Ethereum, I think it is more than reasonable to expect that if Bitcoin is going to rally about 50% back up to that 200-week moving average, that Ethereum here can also rally about 41% back up to $2,000. And I do think this will act as a strong level of resistance here for Ethereum, given the fact that obviously this was the top here pre-merge, and then after we saw this top pre-merge, we actually declined by about 50% back up to $1,000. So I do think that Ether is due for a retest of that 2K. I do believe it will act as a strong level of resistance, and additionally, it is worth noting that if this move does occur over the next couple of months, this should also happen after the Ethereum Shanghai upgrade has gone live, in which people who have had their Ethereum staked since November or December of 2020 will finally be able to withdraw their Ether. So this could actually create some overhead resistance and selling pressure. But once again, given that we have sort of flipped bullish here, the sentiment in the market was extremely negative, and now it is turning around a little bit. And this doesn't just flip on a dime. It does take some time to play itself out. So I do expect a continuation of this price action, once again making for some very good money-making opportunities in this bear market rally. And once I do suspect the bear market rally is going to fade, indicate and that we could potentially be making our way back to the downside, that is when I will discuss potentially opening up some shorts or taking some profits on positions. But at the moment, everything does look good, and I do believe we are due for a rally, at least until March of this year. So I want to show you guys this image here that says Bitcoin cycles can't be this easy to see. Can they though? And I mean, honestly, this chart says it all, right? Like, it's very simple. Bitcoin is a very cyclical trading asset class, as is the entire crypto market. And what you can see here is that it effectively does trade on a 4-year cycle. So 1 year red, 3 years green, 1 year red, 3 years green, 1 year, 3 year, and then 1 year red, which actually brings us all the way up to 2022. Now, what this signals here is that typically the next 3 years for the crypto market should in fact be green. And that is why I asked you guys at the beginning of the video, do you think Bitcoin ends 2023 green or red? Now, it's worth noting that for Bitcoin to actually end the year on a green note, all we have to do here is effectively close above 16.5K on the year. I definitely think this is possible. In fact, I do suspect that Bitcoin is going to close the year above its 2018 all-time high of 20K, and that this will do a lot to improve sentiment leading into 2024, where we will then see the next Bitcoin halving, and I do expect 2024 to yield some very juicy returns for the crypto market. So expecting a slightly green year this year, and then some very impressive moves for Bitcoin and the rest of the market in 24 as well as 25, and potentially not looking at the next red year for the crypto markets until 2026. If you do play off of and respect these 4-year cycles, it is very cyclical in the crypto market, and I do see pretty much that this is going to continue for this cycle as well. And it's not just one indicator that does lead me to believe this, right? So we already talked about how the next Bitcoin halving is set to occur in 2024, and as you guys can see here, as indicated by the blue vertical lines here, which does show you when every Bitcoin halving occurred, you guys can see that following every Bitcoin halving, we have seen some of Bitcoin's largest runs here, and that is why I would expect 2024 and 25 to actually yield some very juicy returns. And additionally, the last chart I do want to show you guys here is the realized price versus the actual price. So you're going to notice here that we talked about the red years being 2014, 2018, as well as 2022. And in all 3 of these years, we actually did see the actual price of Bitcoin go below the realized price. And the realized price is effectively the realized market cap divided by the total amount of generated Bitcoins, corrected for the 1 million that it is estimated that Satoshi Nakamoto himself owns. And what you guys are going to notice is that every single time Bitcoin does break below the realized price here, it tends to take about 6 months to a year for it to break back above the realized price. And once the actual price it does break above the realized price, it does historically lead to some very juicy returns. Now, we did actually see the actual price break below the realized price here back in June when we did see those lows be put in, and we have not yet seen Bitcoin actually run back up to the realized price. It is close at the moment, with the actual price sitting at 19.3K and the realized price sitting at 20.7K. And once again, this is another indicator that does show us that Bitcoin is due for a nice run to the upside. So we have the very cyclical 4-year cycles, we have the next Bitcoin halving, which is set to occur in 2024, as well as the actual price versus the realized price, all indicating that we are due for a couple of green years in the market. Now, as for Ethereum here, I do kind of want to talk about what has changed with Ether leading into the next bull run, and why I think this will still be one of the best performing layer 1s. And the reason being, obviously, is because of the transition from proof of work to proof of stake that did occur in September of last year. And this had a massive impact on the actual tokenomics of ETH. In the last 120 days, only 1,235 new Ethereum has been brought into the float. Now, compare this to what would have been 1.4 million Ether had we stayed under proof of work. And with the current supply of 120.5 million, that would have been over 1% of all Ethereum actually being issued back into the float here. Now we have seen this drastically reduced by 99%, from 1.4 million down to 1,200 Ethereum, okay? And this is going to have a massive impact on Ethereum in the next bull run, as there will not be as much selling pressure. There will not be as much Ethereum being issued, diluting the current holders of Ethereum, and this will make ETH much more scarce as an asset class. So Bitcoin is scarce because of its fixed supply as well as the Bitcoin halving cycles, and Ethereum will become more scarce with time, as it will flip deflationary, in my opinion. In fact, you guys can see here that since we have actually seen this buying pressure of Ethereum, some more more on-chain activity that did really begin back on January 2nd, that we went from having a positive issuance of 5,000 ETH down to 1,200 Ethereum. And the way this works is quite simple. More on-chain activity means higher gas fees. Higher gas fees means EIP 1559 is burning more Ethereum than is being issued. And that is why I do suspect that, I mean, imagine how this would look in a bull run effectively, right? Like, this is just a bear market rally showing us how much of an impact this actual transition had, how much on-chain activity does impact the tokenomics of Ethereum. Imagine when we are in a bull run with sustained on-chain activity, how quickly Ethereum will flip deflationary. I really don't think a lot of people are prepared for how scarce ETH will be in the future, and that is why I do think it will continue to be a top performer. That is why it is the largest position in my portfolio, with Bitcoin being second. I am not a maxi of either. I am a maxi of both. I think both of them will still be the best performers and will remain on top of crypto for the foreseeable future. However, there is actually one altcoin here on the channel that I do predict and pretty much expect to outperform both Bitcoin and Ethereum in the next bull run, and that is Quant. Okay, Quant is an ERC20 token with some very good utility, with some of the best tokenomics in the entire crypto space, in my opinion, and I do think it is going to play a massive role in the future of financial technology and CBDCs. That is why we have been loading our bags with Quant, and it is the largest altcoin position in our portfolio. Now, we were talking about absolutely pounding that buy button back in May, June, July in that double-digit range, and off of those June lows, Quant actually peaked up about 450% from those June lows, currently still sitting up over 200% from that $43 bottom that we did put in back in June. And what I want to talk to you guys about is what I'm kind of looking at here next for the price of Quant. So something else we talked about more recently here, pretty much since mid-November, was actually trading it off of that $100 level of support, which does act as a magnet for the price action. Now, trading it off this level has been a very good move throughout the bear market. The first time we bought it off this level, you were able to sell it at 123 for a swing of 23%. The second time, it made for a nice swing up to 130, so a nice 30% swing trade. And the final time it did hit $100 here back in late December, it is currently made for a nice swing of 22.43%. And I would expect in the coming weeks that Quant is going to make a run back up to 150 as both Bitcoin and Ethereum do continue their move to the upside. So from this most recent buying opportunity at $100, I would expect this to make for a pretty juicy swing trade of about 50% here back up to 150. And I want to show you guys this tweet because although we are talking about swing trading Quant here, it goes without saying, or should go without saying, that my long-term bag of Quant is not for sale. And I think it's very interesting to actually line up both of these charts here. And this is actually the Wall Street cheat sheet psychology of a market cycle. And I want to show you guys what this looks like, okay? So take a look here at euphoria, complacency, all the way into disbelief. And what you guys may notice here is that the Quant chart looks incredibly similar to what we are looking at here. And I do actually believe that Quant is one of those altcoins that could, in fact, hit a new all-time high as early as next year. Quant has been a massive outperformer, not only in terms of its USD valuation, but also in terms of its Bitcoin and Ethereum valuation. So I'm going to show you guys that real quickly as well. So here is Quant versus Bitcoin, okay? Right off the bat, you guys can see off those June lows, Quant has outperformed Bitcoin by about 260%. And now let's take a look at Quant versus Ethereum, and this is actually going back since May. Quant once again outperforming Ethereum by 227%. So Quant has outperformed both of the biggest blue chips in the crypto market. And if it can do this in the middle of a bear market, which is typically not very common for all coins, I would expect this performance to continue into the next bull run. And this is why I assign a 5-figure price target to Quant in the long term. A lot of people think that is baloney, that it cannot happen. But what you guys can see is at the moment, this is how Quant's tokenomics have a massive impact on the price. So Bitcoin currently sitting at a market cap of 371 billion. If Quant was to have this market cap alone, it would be worth 25.5K, while Bitcoin is only worth 19K at the same level. I don't say only as in that's a small price, but the point being is that because Quant has a total supply of 14.5 million and Bitcoin has a total supply of 21 million, Quant is effectively more scarce than Bitcoin. Then you factor in the utility to boot, and that is why I believe Quant is in fact a future 5-figure project. That is why we do continue to take a look at Quant and a lot of the underlying partnerships that the team is making here over at Quant. And a big underlying partnership here is in fact their one with Oracle. So the reason I am so bullish on their Oracle partnership is because it does actually open up Quant and give them access to to a lot of these different people who are using Oracle Cloud for their different services, and that now does include the Pentagon. So Google, Oracle, Amazon, and Microsoft awarded Pentagon Cloud deal of up to $9 billion combined. And the key word for me in this title is that it is in fact a cloud deal, okay? So this implies that the Pentagon is going to be tapping into Google Cloud, Oracle Cloud, Amazon Web Services, and the Microsoft Cloud for some defense and security purposes. And the reason this is important, and especially pertaining to Oracle, is because they are actually using the Quant overledger for their blockchain platform. Now, a big problem with blockchains that we have discussed on the channel and that Oracle is focused on here is in fact the interoperability of these different blockchains. How do we make all of these different blockchains work together? And that is what the Quant overledger does look to solve. So it says here that the partnership between Oracle and Quant, first of all, has given Quant indirect access to over 430,000 clients that are in fact using Oracle Cloud. But additionally, this does help customers looking for production-ready infrastructure to support cross-ledger and cross-blockchain interoperability between the Oracle blockchain platform and other ledger technologies. Quant basically provides an immediately available solution. And another thing that I do want to highlight here is they say that a key sector they are engaged in is financial services, but there are also specific challenges that come in blockchain interoperability in finance, including identity mapping, privacy, security, data protection, and that's what I do think this deal with the Pentagon is going to be more focused on. So we covered in yesterday's video how Amazon is tapping into Avalanche for their Amazon Web Services. We discussed last month, I believe, or maybe we didn't talk about it, but it was announced last month that Google Cloud is tapping into Solana, and we now have Oracle using their very own blockchain platform. So how are the three different blockchains being utilized by these three different cloud platforms going to actually interoperate and work together? And I believe that is going to be through the Quant overledger. Now, additionally, we do know that Quant and AWS did actually already have a partnership going previously. We have discussed this on the channel as well. So this is not like Quant has never been in discussion with these bigger tech companies as well. As aside from Oracle, they have actually also worked with Amazon Web Services, a move that enabled more than 1 million active customers using AWS to benefit from the overledger blockchain operating system to deliver flexibility, scalability, reliability, interoperability, tokenization, you name it. The Quant overledger pretty much does it all. And the matter of fact is that Quant is the native token that facilitates all transactions on the overledger technology. Once again, with an incredibly scarce supply of 14.6 mil and a very big use case for the future of finance, and not only finance, but cloud infrastructure, tokenization. This is why I think we will see an incoming supply shock for Quant, and why I do think it is very realistic in the future for this to be a 5-figure coin. Now, I do want to move into some news here about major crypto brokerage Genesis, who did suspend withdrawals in the wake of the FTX collapse. So Genesis was in fact owned by a parent company, Digital Currency Group, who did also own Grayscale Investments as well as the news outlet CoinDesk. And I can't always help but point out the irony here that CoinDesk is in fact the news outlet that initially leaked this news regarding Alameda Research and FTX, and sort of like the weakness in their balance sheet that did lead to the FTX collapse. So one of DCG's own companies actually outed FTX, which then led Genesis, another DCG company, to actually have to halt their withdrawals. And unfortunately, them halting their withdrawals did have ripple effects on the rest of the industry as well. A big one here being Gemini. So Gemini Earn customers actually had all of their crypto halted. Withdrawals were no longer allowed on the platform, and they're still not allowed, as Gemini actually was tapping into Genesis for their crypto lending program. So we saw here on January 2nd, Cameron Winklevoss, one of the CEOs of the Gemini exchange, actually made an open letter to Barry Silbert, the founder and CEO of the Digital Currency Group, and he pretty much said here he was basically talking about how Digital Currency Group was lending out money to its different intermediaries and companies underneath it, including Genesis and Grayscale. Once again, very similar to how FTX was loaning money to Alameda and vice versa. And then we actually saw Barry Silbert respond here, say that DCG did not borrow $1.675 billion from Genesis. They've never missed an interest payment to Genesis and is current on all outstanding loans. And then Cameron Winklevoss called him out once again here saying, how does DCG owe Genesis $1.675 billion if they did not borrow the money? And since then, we actually did not even see a response from Barry Silbert. Once again, looking very shady, and it doesn't look like there are some things happening over at Genesis. Now, obviously, the CEOs of Gemini are getting increasingly frustrated here as they have not heard back from Barry Silbert. Their customers, basically their customers' assets are still locked on the platform. And Cameron Winklevoss, once again, had an open update to him on Twitter here on January 10th, accusing him on multiple counts of fraud and calls for his immediate removal as the CEO of Digital Currency Group. Now, Cameron Winklevoss calling out Barry Silbert here on Twitter, I think definitely did catch the attention of some big regulators in the US. And unfortunately, they did not only opt to actually go after Genesis, they are now also opting to go after Gemini, as it was announced that the SEC is charging both Genesis and Gemini with security law violations. So they're effectively being slapped with charges pertaining to purported violations of security laws related to the crypto lending products, and both are accused of raising billions of dollars worth of crypto assets from hundreds and thousands of investors. The U.S. securities regulator claims that Genesis, a subsidiary of crypto conglomerate DCG, from December 2020 onwards, struck a deal with Gemini to offer the exchange's customers an option to earn interest on their deposits. By February of 2021, Genesis and Gemini had allegedly began offering Gemini yield-bearing digital assets products to retail investors, with customers tendering digital assets to the lender. Gemini facilitated those transactions per the U.S. financial watchdog. It's also alleged that in November of last year, Genesis moved to halt withdrawals of related products that lacked sufficient liquid assets to meet these redemptions on the heels of the market's recent rout. And that would in fact be the news that they did halt withdrawals here following the collapse of FTX. The SEC alleges that the main investment play in question, which is Gemini Earn, constitutes an offer and sale of securities under U.S. law and should have been registered with the SEC. So Gary Gensler tweeted on Thursday, crypto intermediaries need to comply with our securities laws. This protects investors. It promotes trust in markets. It's not optional. It's the law. Now we have actually seen Gemini actually unable to return about $900 million worth of assets to customers, and they're blaming it on Genesis, and the SEC is saying none of that. They are not only blaming Genesis, they are also blaming Gemini here for offering this product in the first place, and this really does show you guys that nobody is safe from the SEC at this point. Now, I've said it multiple times, the SEC is pretty much one of the biggest enemies to crypto here at the moment, but at the same time, and on kind of like the flip side of this argument, the matter of fact is that a lot of these exchanges have been operating unregulated. They need to be regulated. This is what happens when centralized exchanges are pretty much out here like the wild west. And as you can see now, there is $900 million worth of funds locked on Gemini Earn that is not going to be available to customers. So it is not only Genesis, not only the lender being accused, but also the centralized exchange who was offering the service. And I would in fact expect a lot more centralized exchanges to be targeted in the coming months. Definitely something that we do want to be aware of. Now, speaking of centralized exchanges and regulation, I do want to wrap this up talking about Crypto.com, as we did cover over the summer that they were the first global cryptocurrency platform that actually signed to an OSC undertaking. This is, of course, the Ontario Securities Exchange Commission. And they're very stringent in terms of their regulatory laws for cryptocurrency. All of the centralized exchanges in Canada are very regulated. They are a lot safer than the ones in the US, to my current knowledge, as they do have to actually register with the OSC. If they do not register with the OSC, they are not able to offer their services in Ontario. And we did actually see Binance get kicked out of Ontario for not having the proper compliance in place. This did allow Crypto.com to become the first global platform to actually sign an undertaking with the OSC and operate in Ontario as a fully regulated exchange. Now, this does come with its pros, but it does also come with its cons, as they are forced to basically comply with OSC regulations. And this email was sent out to Ontario users. So please inform that Tether USDT is no longer supported in your jurisdiction. USDT and all trading pairs will be delisted from the Crypto.com app and the exchange on January 31st, 2023, and all USDT transactions will be suspended. Please take urgent action to review your USDT balance and take any necessary action before the effective date. So they are effectively banning USDT on Crypto.com over here in Ontario. And no, this is not only a Crypto.com issue. I do believe this is going to be for every single crypto exchange that does want to operate in Ontario. And the reason being is that I guess Tether does not actually have the current regulations in place to operate in Ontario. In issuing its decision, the OSC never really explained the rationale behind its Tether ban. But a document unsealed on February 17th of 2021 stated that the only US dollars held by Tether that is actually backed the approximately 442 million Tethers in circulation was approximately 61 million on deposit at the Bank of Montreal. So effectively what they're saying here is that if Canada itself, if Ontario themselves cannot verify that Tether is backed one-to-one, they're simply not going to allow Tether to operate here in Ontario. And Crypto.com, this is not a decision by their team. USDT will still be offered in other jurisdictions, but the matter of fact is that Ontario does not want USDT listed on any of their platforms. They do still allow USDC, and therefore Crypto.com is simply complying here to continue operating. So these are effectively the pros and cons of operating in these different countries, right? Is that if Crypto.com does want to continue operating in Ontario, which is the biggest cryptocurrency market in Canada, then yes, they are going to have to deal with regulatory compliance and prohibition in the case of this USDT delisting. So in my opinion, not a concern for Crypto.com, nothing that should be created some FUD out of, just rather Crypto.com continuing to be compliant. And honestly guys, I do expect this to continue over time. I think regulators are going to become more and more stringent on crypto regulations, and if we do want Crypto.com to continue that global outreach, they are going to have to comply by the different laws in these different jurisdictions. So in fact, I kind of see this as a bullish look that they are actually complying with these regulators, making sure they can continue to operate. And I would much rather they are able to continue operating in Ontario than just keep USDT on their platform and then essentially get kicked out of Ontario for keeping that stable coin when they can still use other options like USDC. So not a very big deal in my opinion, but something to be aware of if you are in Ontario. If you have any USDT on the Crypto.com main app or exchange, please convert it to USDC or fiat immediately, because at the end of this month, USDT will be delisted from this platform. So on that note, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Saturday, and I hope to catch you in the next one. Peace out for now.